It is another beautiful Friday afternoon, and I'm so excited to be welcoming you to today's episode of our program, Financial Inclusion and Economic Development, of course, on Amorgate Radio Communications. Oh, and I remain your ever faithful host, Titilola Ogunshono. It's good to have you join us today. Last week we commenced, the introduction of a very engaging, insightful topic where we started our discussion on the relevance of financial inclusion to small and medium enterprises, SMEs, growth in developing economies. And to do justice to this interesting, intriguing, and very germane important topic, we had with us Mr. Ibrahim Agiri, who looked at the concept of financial inclusion. He brought very practical examples. I enjoyed myself because he even asked me questions. It was quite an engaging time for me. I'm sure you all enjoyed it as well. And he went forward, to talk about the specific financial challenges faced by most small and medium enterprises in developing economies, developing nations, developing countries. And we mentioned quite a number of factors, which included limited access to credit, inadequate financial infrastructure, and among others. He also mentioned non-financial challenges faced by the SMEs in developing countries, where he mentioned the fact that most economies in developing environments are usually characterized by low level of financial literacy, which it could actually be a very big bottleneck or drawback to the growth of SMEs, because when you don't even know how to manage how to use the digital tools, how do you want to leverage all the benefits of financial institutions, okay? And we also looked at how we could deploy financial inclusion in resolving these challenges that he mentioned. It was quite an engaging session, and today we'll be going forward to the concluding episode of this interesting, intriguing topic. So thank you so much, Mr. Agiri, for joining us today again.
Yeah, thank you very much, Ma, for having me here once again. I really appreciate for having me here once again.
All right.
I really appreciate that. And
Okay,
I think
thank
this
you
is like a continuity to like what we did last week.
Okay.
So it is my pleasure.
All right, thank you so much, Mr. Ibrahim Agiri, for honoring us with your presence today. Okay, and it was interesting that I went to statistics. Another dimension we'll be looking at today is regulations. How can regulations help us? And I found very interesting statistics. And that is the typical case of Kenya, as at 2011, according to the Center for Global Development report, 42% of adults in Kenya have a financial account of any kind. But according to the Global Tax database, that number increased significantly to about 75% from 42%, to 75%. Okay, and to as much as I increase, and that is including 63% of the poorest to fifth in Kenya. So if you look at where they were coming from, from 42% to 75%, according to the recent report that I saw, according to the Findex data, those measures, approaches, those policies that actually help them to achieve this great feat. And what I saw from another report, the same report, was that one of the approaches that was deployed according to this report is the restrained approach of its regulators. And what they tried to do was that they prefer to set exposed rules. They prefer to set with exposed, that is, they set rules and services and that provides for providers evolved. So they were not setting before that process, and they were not threatening. They didn't deploy a strict ex-ante regime, which could later prove to be very ineffective. So looking at these figures and the fact that report gave us that insight, that one of the things that helped Kenya was, those regulations and the timing of the regulation and the approach to to developing these policies. So I feel that on this note, okay, it's important to also look at another factor, the regulatory environment. So on this note, I'm going to ask you the first question, Mr. Ibrahim Agiri, and it's this: can regulations be used to strengthen financial inclusion and inclusive access to credit?
Yeah, thank you very much, Ma. That is actually a big question, what I would call a big and good questions per se. That is, can regulation be
Okay.
used to strengthen the financial inclusion? And yeah, I will say yes to that question, but
Okay.
saying yes, they need to be put in place. So regulation, as we all know that regulation play pivot role in order to inclusion and access to peace, which Nigeria is also inclusive. So, and for this to be actualized, there must be a kind of truthful design and implementation. That's very important. So not that we are just going to design alone. This regulation that we are talking about, once we design these regulations, are we ready to actually implement those regulations? Those are the questions we
Okay.
need to ask ourselves. So looking at this now, let's start from here. How the regulation support the financial inclusion? So this regulation will actually support the financial inclusion in numerous ways. So for instance now, part of the ways is just that creating an enable legal framework. So this regulation will actually assist in such a way that it will create a kind of legal framework in the financial settings. So for instance now, we are looking at this now, government can try much as possible, like government and regulatory bodies can establish a national financial inclusion policies and strategies. Yes, those are the things that we can actually use that can actually help as well. For instance now, let's make reference to part of the strategy being used by the Nigerian government, part of the regulation being used by the Nigerian government through the Apex Bank, which is being called the Central Bank of Nigeria, when they launched the
Okay.
National Financial Inclusion Strategy, the NFIS. So we can see that through these strategies now, these have actually increased the number of Nigerians with access to financial inclusion. We can now see the part of the strategy now. We can see. So based on the question you asked, man, that you said, can regulation be used to strengthen the financial inclusion? Yes, it can be used. So like based on the reference I made now, that part of the strategy being used was in Nigerian was the National Financial Inclusion Strategy. These are, without no doubt, have actually increased the number of Nigerians that have access to formal financial settings. And these strategies alone, is not only like more of like regulation, but it is strategy being implemented in order to define the role of bank, the fintech companies, financial technology companies, and also the mobile money operators. Even the cooperatives were not left behind. The cooperatives were not left behind. They are also inclusive as well. Another, the ecosystem. So we can now see that creating an enabling legal framework, this will actually help. So part of the legal framework is establishing the national inclusion policy. So which part of it I actually cited an example, the National Financial Inclusion Strategy, NFIS. And also, here, there is something very important that I think the Nigerian is also trying in that aspect as well. This issue of KYC, know your customer. So knowing your customer, it is also a kind of strategy as well, a kind of regulation. So the government should try in such a way that know your customer, the KYC requirement, it is also important. So the financial inclusion now, part of the problem that we are facing is this issue of one of the biggest problem we are facing in the financial inclusion is the lack of identification, that is ID card. I think the Nigerian government also tried regarding that, because now the Nigerian have tried much as possible through our major, the NIN. the national
Okay.
identity number. So Nigerians have been using that compared to in olden days where someone will just pick an ID card being used in his or her shop in order to go and open a bank account. So that is not an authenticity in what we can actually qualify to be a kind of identification. So one of the biggest problems in the financial inclusion is the lack of identity. So this identity, Nigeria is also trying in that aspect. And this our BVN of 18. It is also a regulation. So this requirement has is the lack of people doesn't have this identity. So I think part of the regulations now.
Okay.
So part of the regulation is to build this identity. So in such a way that everybody will have access to all these kind of identity. So that will also be a kind of strategy, and that will even help people to even know their customers. So for instance now, the CBN Tier 1 bank account, that one only required a kind of passport and basic information. So with that now, we can see that even with that identity, for someone who doesn't have a kind of identity like maybe driver license, the identity card, the NIN, or the voter's card or international passport, even if it's just a passport and personal information, you can open a Tier 1 bank account. So with this now, we can see that this strategy will actually motivate people to open bank accounts, but it will reduce their limitation in terms of maybe access to credit, the amount of money they can save. So with this now, regulators can actually introduce a flexible and risk-based KYC requirement. So by doing that now, so even all this fintech as well, once you just open the account, they will place you on Tier 1. So that Tier 1, they will tell you that with just 50,000, you can only save or withdraw, I think 50,000 or so. All these they okay. So with that, you can see being flexible, this will actually enhance the financial inclusion as well, rather than we just saying that okay, you know that the identity, they were very important. So we just saying that okay, this identity, it is a must. But why saying it is a must? Why can't you just make it in such a way that even a student who is not able to register, or an infant that couldn't even register for a sophisticated means of identity like driver license, can open an account whereby it will now be flexible, but there should be a limitation. So those are the part of strategy that the government have been using as well, and Nigerian is really trying in that aspect as well. This will actually make it possible for the unbanked, especially those in rural area, to open bank accounts. So with that, and also we are looking at the regulation and as well the access to credit. Regulation and access to credit. So consumer credit regulation, it's also a kind of strategy that can help, even it is really helping. So this regulatory body can set like lending guidelines to ensure transparency, avoidable. If you can make reference to, let me make reference to what I said last week, where I said the major reason why some people don't even engage in maybe these credit assets of a thing was because of the ambiguity, that rigorous aspects that people pass through in order to like obtain loan. So we are looking at that now. So this regulation, so the regulation of consumer credit regulation is also measures as well. So this can be used to strengthen our financial inclusive. So the regulatory body can set a lending guidelines to ensure a kind of fairness and affordability. For instance now, let's say cap interest rate protect the predator lending. So when there is a kind of interest rate that it is actually, there is a cap on it that okay, so interest, so the interest rate should not be more than 10%. So all those predators in the credit market, that will actually give them a kind of caution. Yes, that will give them a kind of caution. And also as well, license should be given to more microfinance banks, because most of these microfinance banks, they were even the banks, even doctor, I can tell you that some people, they don't know that financial institution, our commercial banks, they give credit, loan. Some people doesn't know, most especially in rural areas. Some people don't know that even banks like Access Bank, UBA, they give loans. So they actually have much interest in all this microfinance. sorry for using that kind of
It's okay, it's
verbal
okay.
language. So that kind of language. So so things like that now. So part of the regulation is just like giving kind of license to all those microfinance bank and the fintech. That will actually goes a long way. So for instance, now CBN also did something, the license of microfinance bank. So to serve the low income population, that also helps. Do you know number of people that through Apple and other microfinance bank, do you know number of people that have been using the financial services? Yes, some people only have account with the Lapo, most especially those in the rural area. So through that process now, those are the part of strategy that I believe that can be used in order to regulate these financial inclusive.
Now, what usually happens is that I've also seen people when they save component. We're talking about financial literacy here. When they save for saving's sake. It should not be like that. I'm just saving. I want to save for 10 years. You have to also remember the inflationary pressure. You have to also remember the time value of money. So never save without an objective. You must have an objective for saving. So that's why I always say, we always say as consultant, get that you must always have a strategic plan. When I speak to accountant, I said, look, if you don't have that strategic plan, there's no way you can talk about your strategic financial goals. Because once there is once you have a plan as an individual, what is my goal as an entrepreneur? Then you can say, because I'm going to achieve this goal, what are my financial needs to achieve this goal? What will it take for me to achieve that? Then you can start saving. So I always say, save with an objective. That must be something you want to achieve in life. You can't live, because the more informed people are, the more dreams that people have as entrepreneurs, being innovative, being creative, then the country would grow, because there is no country or nation that can grow beyond the capabilities of its people. So it is important that you have a goal in mind. So once you have a saving goal, then you have to know the various channels of savings. Okay, we have the traditional savings account, we have the retirement savings fund, we have various investment, portfolios, and again, you have the emergency funds. Okay, and emergency funds, like I said, that's some things that will come up. I always say save. We always say save for the raining day. Okay, but I always say that save and save for a bright future. Save to create wealth. Save to enable, generational wealth, because that's the foundation of it. Okay, and one thing that I've seen is that most people know about mortgage, they know about the real estate, but other ways of savings. Okay, you can fix your money in the bank for a short period of time when you are not even clear about your saving goal. But there are ways you need to find out, those channels of saving. I mentioned some, there are a whole lot of others. Now, one thing that is clear is that financial discipline is crucial. Now, what people do most times is we say pay yourself. It's not always easy, but I will say something. Consistency is very key. Consistency is key. It's not about when I see people say I'm going to spend 50% of my salary, I'm going to spend 50% of my income, of my profit, it's not going to be realistic. So start small. It's about consistency. If I'm going to start with 2%, 5%, or 10%, it looks more realistic, being consistent with it. Now, if I start with even 5%, if 5%, if my income is $1,000, will be different from it's still the same 5%. But when my income increases, I have more to save. But that percentage is important that you stick to it. You can review, but I always advise that you start small and you must, be consistent. Consistency is very key when it comes to savings, and you have to be aware of various savings platforms, aware of the interest rate on this savings platform, because this will help you take efficient financial decisions about your savings. And remember, it's about having a goal. You must define your savings goal, and the savings goal, I expect that will be tilted towards investment purpose. And that will take me to my third component of our financial literacy today, which is investment. For investing, when you save with a goal, I expect that when you save with that goal, you are ready to invest. And it's important that you know the various investment platforms. There are various channels of investment. You need to find, where do I want to play? Do I have the required skills to play in this field? Do I have enough information about the market? Have I done market segmentation? Do I know the risk inherent in this field I want to invest? Do I know the growth opportunities in this sector I want to invest? Can I look at my competitors? Can I do their financial analysis? These are basic things that we need to know in terms of investing. You just don't invest because I have the flair for investing in real estate. I don't want to go there. I need to know what are those opportunities, because sometimes most of us would have the dream, the passion for investing in a particular sector, but we don't even know that there are facilities available in that sector. Now, if we look at the real estate or the mortgage, the mortgage sector, the real estate. If I want to invest in real estate, most times we don't even know that we have mortgage banks that would even give us this loan, the facility. Even some of us, as educated as we are, as exposed as we are, that's why I said we could be financially semi-illiterate, not fully illiterate, because sometimes we feel that these banks do not give out facilities, but they do. That once you are aware about this, I know that if I save up, recently I found out a country, even for developing countries, we know the developed nations, have gotten it right in terms of the mortgage facilities, but even in developing countries, we have mortgage banks still giving out loans. In fact, they give out as high as 70%, you do 70-30, you just need to have 30% of equity contribution. And it's quite flexible. Yeah, the interest rate, might not be competitive like developed nations, but it's still fair, and they want you to have a skin in the game. So it means if you are saying that you have a property of close to maybe 10,000 euros, or it's about 20,000 USD in a developing nation, you need to give them 30% of it, and they finance 70%. So once you understand these various, the role that the financial institutions play, in this partnering with you in investment opportunities, then you can latch on to it. But if you do not know, you will not be able to, fully optimize these opportunities out there. In fact, there are other ways you want to invest in the financial space, the financial market. We have the capital market where you can invest. We have the money market where we can invest. And I recall that most times when I talk about the money market, some people don't even know. They don't know you have the commercial papers, they have the COD, the treasuries. So these are places, the more financially informed that you are, then you know that there are various ways where you can invest. It depends on what your investment plan is. Is it short term? Is it medium? And even for those in that financial space, once you are aware that you want to raise money and you want to invest, in new investment opportunities, and you need the finance. There are ways to raise this fund. So investing is important. You must understand the various investment channels, various investment platforms. You must even look at even the product and service sector. You must understand all of these things so that you can optimize it. So investing is but not just saving, but also optimizing investment opportunities. And of course, I will also mention tax awareness. You need to be aware. You need to be aware of your tax obligations as an individual, as a business. You need to understand the various compliance issues, where you are. Then you must also understand ethical ways, strategies to reduce tax liabilities. I mentioned ethical, legal ways to reduce tax liabilities. This is important. You need to know all of these things. And one thing that is also important that you need to know, an important aspect of financial literacy, and that is be able to, how do you build and improve your credit access? How do you build your access to credit? Now, if you know the prerequisite for accessing credit, then you can work on that. One thing I've also realized, I remember I was speaking to one of our clients, and we were talking about the credit scores, and we have a particular country where the non-performing loan is as low as very low. People pay up. It's a culture, it's a cultural thing. So remember that in some countries we have that culture not to just pay bad debt. So I know that sometimes it's not intentional. Sometimes you have unforeseen contingencies. Some things could happen, but we will say that what is important is when you have when you are willing to pay back. Ability, if you don't even have the ability, you pay back with time, but the willingness to pay back is also very crucial. So one thing that is important in building and improving your credit assets as an individual, as a business, is your credit score. Okay, credit score. You look at how well you have been paying all those loans, that you have facilities, you have had access to, the timeliness. So that would also help, because you are looking at having that strategic approach, okay, to optimizing financial services that would enhance and one's financial status. So you must know how to build and improve credit assets, and I've mentioned that credit score is very important. Okay, so we've mentioned various components of financial literacy. So what are the benefits of being financially literate? How does that help an economy? In what are the various dimensions, various perspectives in which it could help a nation when its citizens are highly financially literate? So what are the benefits? Individuals, businesses can take better informed decisions. Okay, you cut down on unnecessary borrowing. You can optimize your funds as an individual, as a business. You look at various investment platforms and see what works best for you. Okay, with that you can take better, more informed decisions when you're financially literate, and it helps. And the second is going to improve business growth and expansion, because once you understand the fundamentals of financial planning, you understand the tax and regulatory requirements, you understand the various funding options, you know what works best for you as a business, as an individual. You understand the risk, you can identify risk, you can manage risk, the risk management strategies. Definitely you can grow as a business, and that will lead to expansion, because you're optimizing your resources, getting the best, you're avoiding litigation issues, okay, and it's going to help the sustainability objective of your business. And what else can you do, which is important for us? We said it's because we said financial literacy as a catalyst for financial inclusion, is that the more financially literate people are, okay, they're going to have trust. It's going to be trust and confidence in the financial system. Because sometimes when people are afraid of using this a particular service, because it's come from a place of lack of knowledge or expertise in a particular area. So what will it do? It's going to increase financial inclusion and credit access, because when people are financially literate, they're financially informed, they can use this product, they are aware of the services, they can use it well, and that would help us have more people within the financial banking space. That would help bringing in the funds into the financial banking space, and even the financial services financial service institutions can play the intermediary function well, taking from the surplus sector, giving to the deficit sector. The deficit sector will be able to plow back into investment opportunities, and that will create more jobs. More jobs mean more income in the economy. More income in the economy, we need aggregate demand, and when that happens, you can produce more, and it leads to an increase in economic growth, and economic growth, the GDP of a country, because you are producing more products, you are getting out more of services, optimizing your resources, and when this happens, it's going to lead to economic growth. And if it is sustained across all sectors, where we don't have over dependence on a particular sector, is expected that it would lead to economic development. You see that financial literacy, as simple as that sounds, is plays a crucial role. Is the bedrock, is the foundation of how people can better manage their financial resources, how people can better optimize investment channels, savings channels, how people can cut down on unnecessary waste, which is important, unnecessary waste, and maximize their returns. And you have countries that have done a whole lot, financial. That's why you cannot overemphasize the importance of financial education campaigns that's been done in Rwanda and becoming a country like Ghana, and these have encouraged businesses to build that savings scheme. So when people understand what is in need for them, the Wifing principle, it becomes easier. So we need more financial education across schools. Sometimes I hear, no, I'm a science student, so I don't know so much about finance. No, I'm in the arts, I don't know so much about finance. It's for those with commercial classes. It has got beyond that, because even as a medical doctor, you are going to run your hospital. You are going to talk about ROI, you are going to talk about expenditure, you are going to talk about for how your income. You are going to look at all of those of fixed assets. It's fixed asset across any sector. Okay, so it's important that financial literacy is taken back to the schools, is taught, deliberately taught. And I like what the government has done, Nigerian government has done, even with curriculum, where we have new courses, in terms of financial education. I know one of the financial development in Lagos State that was introduced for 100 level student economics department. They're doing a whole lot, but I want to also see us having some things like that deliberate with our GNS courses. So no matter what you're studying in our schools, we are deliberate about teaching them early about financial literacy, because it's a catalyst for financial inclusion. I wish I could go into countries that have gotten it right, but we can't take that on today's episode. We'll look at it maybe next episode or subsequent episode, where we'll look at we'll talk about those countries that have gotten it right in terms of financial literacy, and look at what they have done to achieve this great feat. This is all we can take on today's episode. I hope you enjoyed yourself and found it valuable and insightful. I enjoyed myself talking about financial literacy because I'm passionate about this. I will not leave without dropping the quote of Alan Greenspan, which says, and I quote, "The number one problem in today's generation and economy is a lack of financial literacy." I hope you join us same time next week, 5 p.m. WAT. And remember to join my colleagues Monday through Thursday, same time, 5 p.m. WAT. Remember, we have a lot of videos uploaded on our YouTube channel. Kindly subscribe if you have not subscribed before, and you have a lot. Kindly share with your friends on other platforms. A lot of inspiring, a lot of insightful, engaging episode that you would learn from. Stay tuned to us to stay informed and be inspired till I come find my way to your devices next week, same time. Keep safe, stay blessed, and happy new month in advance.